It's time for Wise Money with Korhorn Financial Group with certified financial planners Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of the Wise Money Show with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being here, friends. My name is Mike Bernard. I'm your host. I'm also one of the CFPs on the program. And with me in the KFG studios, my business partner and fellow CFP, Josh Gregory, special guest health insurance expert, Ben Bulgrien.
Yeah, welcome, Ben. Hey, if you find yourself between jobs or you're self-employed or even if you're retired early, those are all scenarios where you may need to explore whether you should get your health insurance through the marketplace. What should you expect? What should you watch for? We're going to share the pros and cons of health insurance on HealthCare.gov. Cover that and more on today's episode.
And more, because it's there's a smattering of topics. We'll see how many we can get through. I tend to talk a lot, by the way, if you haven't noticed. But we'll get into a variety of topics and situations. If you have a question for the program, we have several for Ben that we're going to hit today. You can call or text us 574-222-2000. That's 574-222-2000. Online, wisemoneyshow.com is where you can find us, leave questions there as well. Then all over social media, you can do the same thing. You can find us there and leave questions. How about that? So, welcome to the show, Ben.
Thank you.
Let me guess, it took you 3 steps to get from the parking lot down to the studio. Ben is a giant of the man. I say that every time he's here because it is just funny to me. 6'13", right? That's your height. So glad to have you here. Ben's one of our health insurance experts on the team. And actually, this is a good segue into the topic that when we're outside of health busy season, of course, always available to serve clients and help you with your questions, but also helps with our tax team. It's busy season, it's tax season, and so he's helping to review tax returns with folks as they come in. That's another one of his strengths. And we're going to start with that right there. Yep. If you get your health insurance through HealthCare.gov, you need financial planning. There are planning issues that you need to be aware of. So we're going to start with that topic. Getting your health insurance through the exchange, through Affordable Care Act. Some people still call it Obamacare. I call it HealthCare.gov. It's like direct and to the point.
Yep.
What are the advantages? What are the benefits of HealthCare.gov?
Yeah, I see 2 main advantages. There are a number of other ones, but the 2 big ones, one we are alluding to right now, the potential tax benefits. So HealthCare.gov, Affordable Care Act, they're referring to the same thing, just like you said. And so the intention is, if you go to HealthCare.gov, they are going to ask you some household questions. That's going to be who all is going to be on your tax return, yourself, potentially a spouse, potentially some dependents. And then it's going to ask what your projected income is for the calendar year. So for 2024, if you had a valid enrollment period and you were looking for coverage through that today, they would say, okay, what's your expected income for the whole year? And they're going to use that number to help make that plan, I'm going to do air quotes, affordable. And it's affordable based on what they've calculated. Doesn't necessarily mean it fits in your budget. But that's how they're going to say, in order to help more people get coverage, how can you reduce the full price plan to something that more people can get access to?
And so what do they deem, and I'm putting you on the spot here, and you don't need to know because I know it like off the top of your head, but give me a range. What do they say is affordable? Like it's a percentage of your income. The government is saying, yeah, it's affordable if you spend X percentage of your income on health insurance.
So a couple different things could go into that. There's another rule that calculates affordability if somebody had coverage through an employer.
Okay.
So if somebody has coverage through an employer, if the coverage offered is 8.39% or higher, then it is considered not affordable. And so somebody would be able to get tax credits through the marketplace.
And that's 8.39% of your take-home pay or your gross wages?
Your gross wages.
Okay.
Yeah. Yep. And so that's one way. Another way to think about it is the general rule of thumb is an individual is eligible for advanced premium tax credits through the marketplace if their income is 400% or lower than the federal poverty level.
You've been very precise.
Yeah, I know, that's right.
Because
You're just making these numbers up.
Yeah,
I can tell.
I'm just telling everybody.
I know that stuff in my head, but you being able to pull it off right there, that's great. Okay, so yes, there's potential tax benefits. That's a huge deal. We're going to get into that more in just a second.
That's one of the biggest deals, right?
Yes. Mm-hmm.
And obviously, the lower the family's income is, the more I don't want to say lucrative, but the more affordable that the coverage becomes, because essentially we're using tax dollars to offset the premiums that you would have otherwise paid. It just keeps chipping away at the out-of-pocket cost for that coverage. And again, a family of 4 that's making a modest income, you could have really good coverage, very, very cheap, because of these tax write-offs that you're getting.
Yeah. All right. What about the second real big benefit?
The second one that isn't talked about quite as often is that coverage through the marketplace, HealthCare.gov, is guaranteed issues, meaning that no matter what your health condition is, as long as you're within a valid election period, you can sign up for a plan, and you will not be charged more for that plan. There's no health questionnaire. The only thing that they're going to ask about your age, and they can charge more if you're a tobacco user. But somebody with significant health problems, somebody that's generally healthy, they'll get the same cost.
Yeah, so they're not asking about pre-existing conditions or any health history that's coming with you. You could be 7 minutes away from giving birth to a child, and you're going to be covered. Like you can buy this coverage as long as you're buying it in the right period of time, right?
Right.
There is that catch that probably we should unpack.
Let's hit that, because I also say this is one of the big benefits. Josh, we were in our careers before this came about, right? Before the Affordable Care Act and all the drama that went with that. Oh my goodness, let's not even step in it. But as we were doing financial planning for folks that were going to retire early, it was always a question of, all right, what are you going to do for health insurance? Let's really figure this out. That is still a big thing you need to figure out. But the fact that you have an option through HealthCare.gov, that is significant. So when can someone get coverage? When is it guarantee issue? And when is it, no, you're going to have to wait, or you're going to have to do something different?
Yeah. So the easiest one is, every year we have a open enrollment window in the fall between November 1st and December 15th that anybody can sign up for coverage to begin January 1st. So that you have coverage currently, you haven't had health insurance for the past 10 years, you have a lot of health conditions, you don't have any health conditions, anybody at all can sign up during that window.
That's like tax season for you and your team, right?
Yeah, it is.
You're seeing everybody all in a short amount of time.
And the other period of time would be if somebody qualified for a special enrollment period, and that could potentially be at any point throughout the year, as long as they have a qualifying life event.
And that should be fairly common, for folks to be aware of. I lost my job. I switched jobs. We moved, something like that.
Got married, had a divorce, anything like that. The big thing with those ones, the plans are still guaranteed issue. You can get them. They can't charge you anything more, but only if you have had coverage beforehand. So if you had coverage and that change happened, you can switch. You've got 60 days. If you go beyond that 60 days, it is not, well, now they can charge you more. It is, well, now you can't sign up until that open enrollment period in the fall.
And when you say you had coverage within the past 60 days, is this where the term creditable coverage comes into play?
Yeah, a qualifying health plan.
Yeah, it's not just any type of quote-unquote coverage.
Yeah.
Some types of policies may or may not actually qualify you to be able to fit into this 60-day window.
Yeah, that is an excellent clarification, because we could look at short-term medical policies that they say, oh, I didn't have coverage, so let's jump on one of those for 30 days, and then that opens up an enrollment period. No, unfortunately, it doesn't work like that, so that is a great clarification on that piece.
And then the open enrollment, we're going to talk about this more coming up later in the program. There's, what do you say, there's 4 open enrollments out here? But the one that applies to this for HealthCare.gov, Affordable Care Act, that's just in the fall.
It is from November 1st to December 15th for coverage to begin on January 1st.
Okay.
And then it extends into the following year until January 15th, and that coverage would begin on February 1st then.
Yeah, which is helpful just in case you missed it, but at the same time makes it a little bit more confusing.
Yeah,
Right.
is that for people who just weren't paying attention and they kind of missed the window, and so there's a catch-up period here? Or?
Yeah, it can be. It can also be individuals that during the time where they could have, they had a life change, an event, and it happened after that December 15th, and they didn't have coverage. So,
Oh, interesting.
All right, so those are the main benefits. Well, what about the drawbacks of HealthCare.gov? And then, more importantly, what about the planning implications that you need to be aware of? We're going to hit that and more coming up on the Wise Money Show with Korhorn Financial Group. Hello, YouTube. Thanks for being here. This is the Wise Money Show. What you're watching right now is our weekly 1-hour talk show that airs right here on this channel, 10 a.m. Eastern time, also on podcasts at the same time, also on a couple local radio stations at the same time as well, which is why it's a talk show and where there's banter and it's about an hour long. But for more content applied directly to your situation, we air Next Wise Step videos all throughout the work week, Monday through Friday. That well over 1,000 videos that take a financial concept and help you take your next wise step with it. So make sure you hit that subscribe button, turn on notifications so you're made aware every time we drop new content. If you like the content, leave questions as well. We appreciate it. Alrighty. As might be the first time ever, Lindsay. I was a couple seconds short on that. Oh. Yeah, so you'll have to put in a cartoon or something. Create some filler. So, okay.
Do you know off the top of your head you were referencing the 400% of the federal poverty level?
Mm-hmm.
What they've set that to for 2024? Do you know?
I do not know.
I know it changes all the time.
It's
right?
in the 70s,
and it's based on how many people are in your house and whatnot.
federal poverty level, family of 2. It was one of my quick searches. Ooh, 81.
81 times 4. If we're going to the 400% of
no, 81 is for is the 400%.
Oh, that is the 400. Okay.
81,760.
That makes sense. For a family of how many?
2.
Oh, 2. Not 2 kids.
Correct.
And I do think that there has been some flexibility with that the past couple of years where they have expanded those tax credits beyond the 400%.
Correct.
But
that's where I was going with that first question.
Yeah.
Is what percentage? Because even if you're above that, they still look at a percentage. And what is it? Up to 8.5% or somewhere? You said 8.3.
Yeah, because it was new for this year. Yeah.
Okay. All right. Let's get into disadvantages, and then we'll talk about some planning concepts with it, and then keep rolling. Here we go. If you get your health insurance through HealthCare.gov, I'm just bold statement here, but you need comprehensive financial planning. There is no question about it. You need planning. We're going to explain why here in just a second. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Josh Gregory, special guest, health insurance expert Ben Bulgrien. Stay up to date on all Wise Money content. Find us online, wisemoneyshow.com, and then all over social media, wherever you're at, we are there as well. Search the Wise Money Show. Starting topic is pros and cons and planning issues with getting your health insurance through HealthCare.gov. We talked about the pros, okay, the potentially lucrative tax benefits. And agree with it, disagree with it, doesn't really matter. It's the law. It's like, well, you can agree or disagree that 401ks are available, but they are. So how can you make the most of it for your situation? Same thing with Affordable Care Act and those tax benefits. And then guarantee issue, if you qualify, and many people do, it's easy to do that in these different windows. But the drawbacks, and let me just hit the first one, you can't keep your doctor. Okay, so it is different health insurance. So you've got to check out the network.
Yeah,
right?
Absolutely.
What are some of the other negatives?
So we'll keep going on that one for a little bit. Most employer plans are PPOs, preferred provider organizations, and most marketplace plans are HMOs, health maintenance organizations. Now, does that mean anything to us, the standard person? No, not a whole lot. But really, PPOs are more expansive. They have fewer restrictions. You don't need a referral to go see a specialist. HMOs are more restrictive. So a fewer amount of people are in those plan networks, and you do need referrals to go and see any specialists.
So how do you navigate that as a consumer? Should you be looking at something when you're comparing plans?
One of the first things, the most important thing that we do when I sit down with somebody to talk about options for health insurance, We enter in their doctors into a search tool, and then that will tell us, okay, so this insurance covers 4 of your 7 doctors. This one covers 0 of your 7 doctors, and this one covers 6 out of 7 of your doctors. Mm-hmm. So that's the first thing that we're looking at to make sure that somebody gets the coverage that matches their needs the best.
Yeah, how much is this going to disrupt your life? Are you going to have to go find new doctors to trust? All of that. And man, that's not an easy process either, because a lot of doctors are not accepting new patients these days.
Mm-hmm. So this okay, let me just plug this here. And you guys know Wise Money Show is not an infomercial. We're trying to help you and want you to think about your finances from a comprehensive standpoint. That is the pure purpose. Going and getting your insurance through the Affordable Care Act, you can go directly to HealthCare.gov, or you can work with an agent going through HealthCare.gov.
Right.
The cost is going to be the same.
Exactly the same.
Right. It's like buying a house with or without a realtor. You could do it on your own. That's fine. You could do it with a realtor, and how the system is set up, the seller is the one that pays for the realtor. So use a realtor. In this case, my goodness, use an agent. I mean, they're because I just doubt people are going to do that search on their own. They're even going to think to start there. To me, it's like a game. When I go to HealthCare.gov, I try to put in the answers, and it's like, all right, how many insurances am I going to be offered? Which is another con, by the way. And what's the price?
Yeah.
But there's some planning with it.
Yeah, and you don't know what you don't know, right? The agent's job is to, help guide you towards the best decision for your unique situation, but it's also to educate you, to make sure that your questions are being answered. Unfortunately, a website with frequently asked questions on it isn't really going to pull off the same experience for you.
And recently, one of the insurance carriers that we have represented around our area has stopped providing information directly to HealthCare.gov on which doctors are in that plan's network.
Oh, geez.
Whoa.
And so now it's not we're going to go here, enter all of your doctors in HealthCare.gov, and it'll let us know all of the options. It'll let us know some of the insurance companies that provide that information to HealthCare.gov. But one of them, then now we need to go to that insurance carrier's website directly, type in all the doctors again. That's just another barrier to finding it on your own.
If you were a consumer or trying to get your own insurance in place, you wouldn't even know to go do that necessarily.
Right.
What are some other cons? I know I just teased one out there, but what are some other negatives with HealthCare.gov?
There are a lot of options. And so there are 60 or so, depending on where you're at. I always joke with people that will go through each one in fine detail because that's what everybody wants to do.
It feels like 5 years ago. It feels like pre-COVID, you could search and there weren't going to be a lot of options. And certain, where we're headquartered, northern Indiana, southern Michigan is what they call it. It seems like in Michigan there weren't a lot of choices. And I don't know if that's still the case, but at least the last few times that I've helped clients search, it's a ton. It's a ton of options.
Yeah.
So
lots of options, and especially with where we're at, we have a lot of people that are on the southern border of Michigan that come to Indiana to see doctors. And that's a whole nother issue. Finding insurance companies that are HMOs that travel across state lines. So that limits their options quite a bit.
So not just in our neck of the woods, but what about if you're traveling? You're out in California visiting family and you get really sick or you have an emergency of some sort. That's not where your doctors are all located and everything. So are you, by definition, likely to be out of network and going to have more expense if you have this type of policy and you're traveling?
So in a couple different situations, one, if you get sick and it's not urgent, if it's just, I got a cold, I want to get some antibiotics, something like that, that would be considered being outside of the plan's network. And so you'll get charged the full cost of that care, and it will not be applied to your deductible, and it will not be applied to your max out of pocket. In an emergency situation where you're traveling, you need immediate medical care, then that coverage is counted as in-network. So in-network rates apply to the deductible, apply to your out-of-pocket maximum for the year.
Interesting.
We got to spend a day during our spring break at traveling around trying to get some medical attention for the daughter.
Really?
So that was that was fun. It took the whole day. But thankfully she was okay. So, okay. One of the other cons, and this is a segue into the planning piece, is surprise tax bill. And I mean like a surprise where, you go $1 over and you're slammed with $13,000 of surprise tax bill, something like that. And I think part of this is from another con that when you have, you're in between jobs. This is a common scenario. I lost my job, or I'm going to start a business or something. And you look and you're like, well, I was making income, but it's gone down significantly. So you go to HealthCare.gov, you input your income, and you're thinking, well, I'm inputting my new income. Or you're thinking, I'm just putting in my own income. And you don't realize that, no, it's your entire household's income for the entire year. And so it's all, and I'm not going to say it's like not fair or whatever, because these are taxpayer dollars, but one of the biggest use cases for HealthCare.gov right now is I had a financial event and gosh, I need coverage. And I'm really hoping I can get some of these premium tax credits, but you don't qualify because your calendar year income is too high. So let's talk about those planning issues with that, Josh.
Yeah. So, I mean, you were kind of describing there that when you go to sign up for HealthCare.gov and buy your insurance and everything, you're making an estimate of what your income is going to be for the coming year.
Right.
You're not telling them what it has been up to this point or what you think it is right now. And based on that estimate, they're going to price this thing out for you and award you a certain amount of advanced premium tax credits. And that advanced word is really important because you're essentially getting an assumed amount that we think you're going to be qualified for when you go to file your taxes at the end of the year. But how are taxes filed? We look at the actual results of how did your income really play out throughout the year, and then we know what you were actually qualified for. It's very possible that you've been receiving advanced premium tax credits, these free write-offs essentially on your tax return throughout the year that you weren't actually going to be eligible for because your income came in higher than what you thought.
Because you said, now they fixed some of this with I can't remember what law that they passed, but it used to be that if you were $1 over, you got none. So it was not surprising to see where instead of getting a refund, you owed $13,000, something like that. Now it's a little more gradual. Ben, you just had one where they were going to owe $3,000, but we needed to find a way to plan and contribute to an IRA, HSA, whatever, to reduce their AGI, and then they ended up keeping those.
This is why your certified financial planner, your CPA, needs to be involved in the planning aspect of this. But if you go to file your tax return and you have a surprise where you find out, man, I'm having to pay back some of these credits that I received throughout the year. There may be still some last minute planning that you can do at tax time before you file. Maybe it is contribute to an IRA, or you make some adjustments on the return that can help make you eligible again, is the idea.
We've done full shows on those. We're not going to be able to run through all of them right now, but I stand firmly on the idea if you get your health insurance through HealthCare.gov, you need financial planning. You need financial planning, the tax planning component of it. All right, we got more coming up on the Wise Money Show with Korhorn Financial Group. Okay, we can pick that back up if needed. Not sure how much needs to be said, or we still want to share.
Still just emphasizing tax projection work and whatnot.
Yep. So let's pick that back up, and then we'll head into open enrollment, and then that's that doesn't segue into the next topic, but we're obviously dealing with the case of someone that wants to switch from Medicare Advantage to traditional Medicare. So just we've tucked that into shows where we're explaining Medicare, and it's more of like an afterthought. But I kind of want to hit that centrally, which is why. So we're going in the third segment. Yep. So that's where I thought, well, this might take a while.
Yeah.
So, but we'll hit open enrollments first. Okay, so if you're on Medicare and you've made one decision with your Medicare, say traditional, and you want to switch to the other type of Medicare Advantage, what are the rules? Can you do that? And what about the opposite direction? We're hitting that and more coming up right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Josh Gregory, special guest health insurance expert Ben Bulgrien. Every episode of the Wise Money Show is on podcast. Wherever you listen, just search the Wise Money Show. Subscribe to it there. Follow us there. Rate the program there as well. That's helpful feedback for us and helps others who are looking for content on wise financial habits, helps them find us as well. So we appreciate that. Okay, guys, before we transition into another health-related topic, just putting a bow on getting your health insurance through HealthCare.gov. There are some very meaningful benefits that are not available with many other health insurance options. That it's a guarantee issue, and there's some big tax benefits. There's some trade-offs with that, and one of the negatives is, well, if you're not planning for taxes, you can get an awful surprise.
That's right. If you're just assuming too much about the future, that this coming year is going to be just like the past year that we just ended, and you use the wrong estimates of where your income is going to land, you can get yourself into some hot water on your tax return. And it's because you think that you're going to qualify for some advanced tax credits that don't actually materialize when you go to file your return. And so to me, you were very emphatically saying that if you're getting your health insurance through the Affordable Care Act or through the marketplace, then you have to be doing financial planning. And I agree completely. And specifically, this is one of the intersections between your tax planning, your health insurance planning. This affects your family's budget.
Yeah, present financial position.
It could impact maybe the timing of when you choose to retire, where you're going to pull your income from out of your investment accounts. Like you don't make this decision in a vacuum and have it turn out well, right? I mean, this has to be a coordinated effort amongst all the areas of your financial life. But I want to emphasize especially the tax projection, because it's what gives you the clues as to what your tax picture is going to look like. Often in the fall, you guys hear us on the show say all the time that one of the regular activities that you need to be engaging with your CFP on is a tax projection each fall, so that sometime in September or October, you have an idea of what your tax picture is going to look like before the year is up, right? Well, that's especially important if you're in a situation where you're covered under HealthCare.gov, you have an Affordable Care Act policy, because you want to make sure that those estimates or those assumptions you made late the prior year, or that you've been assuming are going to play out this year, are they actually falling in line with what you thought? But also, we're coming into, in the fall, the open enrollment period where you need to rethink and reimagine, how do I want to have my insurance for the coming year? And so this is where you can't just do a tax projection for the current year that you're in. You also need to be looking out a year. And so you've heard us more and more talk about on this show the importance of having a multi-year tax projection. And I hope that this is a discipline that your certified financial planner is helping you with. If not, you need to be asking for it, especially if this is how you're getting your health insurance covered.
I mean, the only thing geekier than talking about a multi-year tax projection is talking about health insurance. So check. But you're absolutely right, Josh. It's needed. Let's pivot here. We're still in an open enrollment. It seems like there's always an open enrollment. It seems like, Kohl's is always having a sale or something like that. So Ben, what's the open enrollment we're in right now? Why does it matter? Who's it applied to?
So we're actually in two different ones, and they're not all called open enrollment. There's the open enrollment in the fall. There's the general enrollment period. There's the Medicare Advantage open enrollment period that aren't all that helpful in distinguishing when or what they're for, except for the Medicare Advantage one.
Yeah.
So that's one that we're in today. Between January 1st and March 31st of every year, if somebody has a Medicare Advantage plan, they can make changes to that plan, meaning that they can switch from their Medicare Advantage plan to a different Medicare Advantage plan, or they can drop their Medicare Advantage plan and join a standalone prescription drug plan.
Okay.
If you don't have a Medicare Advantage plan, you cannot take advantage of this window. So if you had a standalone prescription drug plan, today, that would not allow you to switch to a Medicare Advantage plan. The other enrollment period that we're in today is the general enrollment period for Medicare between January 1st, March 31st, same time frame, and that's for individuals who do not have original Medicare today. That'd be Medicare Part A and Medicare Part B. During this time frame, they can enroll in it to begin the first of the following month of whatever month that they sign up for.
So wait a second. So this is so we already mentioned qualifying event. So you've retired or whatever, and you transition on to Medicare, and you're going to have to make a decision. We're going to talk about this in just a second, what type of Medicare you want. But you're saying if someone passed that, this is a time when they can actually get onto Medicare.
Yes.
Okay.
Yep. If somebody didn't tell them that they needed to make a decision, or for some life something in their life happened that prevented them from making a decision, this would be the time frame for them to then join Medicare Part A and Part B.
And they don't get penalized for waiting and into this window of time. Like if I was supposed to sign up a year or two ago, I've just been literally living without any coverage in my life at all. And now I decide, okay, I'm ready.
As long as it's within 12 months, there would be no penalty for Part B. As soon as 12 months has passed, for every 12-month period that you go without having it, there's a 10% penalty that never goes away.
You keep paying more premium for the rest of your life for being late. Mm-hmm. So it's one of those times. Being on time is especially important.
That's right. There's a little extra twinkle in Josh's eye there because he's not.
I was a little bit late this morning.
You're not known as a punctual person, but we love you. Awesome.
Really? I have a reputation.
Okay, so there is a little bit of a segue here. Ben, you and I are dealing with a few scenarios, and one of them is when you've made a Medicare decision and then you want to change it. So you mentioned this open enrollment is the time when you've made a decision, hey, I'm in Medicare Advantage, and I want to change Medicare Advantage plans. What if you are on Medicare Advantage and you actually want to switch to traditional Medicare?
Yeah.
Or the opposite? So I know it's going to take a lot of words, but can you just explain the two differences, but then let's focus on, well, can you switch?
Yeah.
When can you switch? How do you switch? That sort of thing.
Yeah. So Medicare Advantage plans are run by private insurance companies, and they are within, similar to the Affordable Care Act plans, they have guaranteed issue as long as you're within a valid enrollment period, and that would be between October 15th and December 7th each year. So if you are on a original Medicare and you want to switch to a Medicare Advantage plan, that's kind of your window. The Medicare, or the original Medicare, Part A and Part B, with a supplement and a prescription drug plan, when you first are eligible for Medicare, you get guaranteed issue for those Medicare supplements as well. Those are going to help cover copays, coinsurances, any gaps in coverage. Medicare supplements are also referred to as Medigap policies.
Okay.
They're guaranteed issue if you come off of an employer plan or when you're first turning 65 and are eligible for Medicare. Beyond that, if you go past that and you sign up for a Medicare Advantage plan in the first place and you have it for more than a year, then you'd need to pass medical underwriting in order to join one of those. You need to prove that it's worth it, again, air quotes, for that insurance company to insure you.
And here's the why. So I'm going to summarize and explain a little bit of the reasoning. So when you get onto Medicare, you're going to make arguably the biggest health insurance decision of your life. And yeah, if you have a major medical event, then prior to that, your health insurance decision was really important. But this is a biggie. Right at the time you want your health insurance to be simple, retirement, that stage of life, it's complicated. And you're going to decide between, I call it traditional Medicare, you're calling it original Medicare, potato. Medicare Part A, Part B, Part D, and a supplement. Okay? And we're not going to break all those down, but hospitals, doctors, all the gaps, and then prescriptions. Or you're going to pick Medicare Part C, the part of the alphabet that was left out there, which they also call Medicare Advantage. Those are two different things, and they're both called Medicare.
Yep.
So you think they're the same, but they're different. Medicare Part C, you're going to pay your Part B premium, and then you will select another plan, select a Medicare Advantage plan, and that could come with a premium, or that premium could be fully subsidized by your fairy godfather, maybe by the government, Uncle Sam, and that will come along with it. Maybe drug coverage, right? Maybe not. But will come copays and deductibles and those sorts of things. So that's the big decision that you're going to make. We're going to come back to then, well, wait, when can I switch again? How do I switch again? Because you'd think, well, if it's such a big choice, is it permanent? What if something changes in my life? I should be able to take a mulligan, right? No. Not really. And we're going to explain why and all of that. So that and more coming up on the Wise Money Show with Korhorn Financial Group. I wanted to keep going. That's a real cliffhanger. If you
keep people listening.
if you haven't totally been lost by what we're talking about.
Okay, here's a quiz for you, Snapple quiz.
Oh, all right. Here we go.
Top performing companies are called what after the costliest chips in casinos?
Fortune
Talking about
500.
stocks.
Fortune 500. Blue chips.
Blue chips. There you got it.
Okay.
Okay.
Sing Casino
Snapples.
Fortune.
Yep.
Okay. All right. Now back to real life. 4-segment. So I'm going to pick that back up. And then, we can get into the special need plans for Medicare Advantage. Like, we'll just see how far we get.
Yeah.
But 4-segment, land on the plane. Okay. Here we go. Thanks for being here. This is the Wise Money Show with Korhorn Financial Group. My name is Mike Bernard. With me in the KFG studios, Josh Gregory, special guest health insurance expert Ben Bulgrien. Every episode of the Wise Money Show, as well as a lot of other content, over 1,000 videos on the YouTube channel. Go check it out. Go to YouTube, search the Wise Money Show, subscribe to it there, turn on notifications so you're made aware every time we drop new content like this talk show or videos that we air all throughout the work week as well. You can leave questions there as well and share videos, share content. We appreciate that. All right, so we left off on a cliffhanger. You're going to make this big decision between when you're getting onto Medicare, traditional Medicare, A, B, D, and a supplement, or Medicare Part C, Medicare Advantage. And Medicare Advantage, I'm just going to overarching simplify. This may not apply to your specific situation, but this is typically the case. Typically, it's cheaper for Medicare Advantage.
Sure.
Premium is typically cheaper.
Premium-wise.
You're going to pay your Part B in either case, but then the Part C premium is typically cheaper than a supplement.
Yeah.
And how is that the case? Well, subsidized by Uncle Sam in many cases. Okay. So cheaper.
Is it also, though, because you're accepting more risk?
That's the next part. Yes. Because also you're going to have more out of pocket, most likely. There's going to be more copays. Deductible could be higher. When you need the coverage, you're going to have more to pay.
Yeah.
Versus traditional Medicare, if you get a good supplement plan, there might not be a lot of out of pocket at all. So here's the potential. Why doesn't everyone just start with a Medicare Advantage plan? And then when you start getting that diagnosis of, my knees start hurting, and they don't stop hurting, or, hey, I'm going to have to go to the doctor to get this checked out. Well, I'll just switch over to a supplement plan then.
Yeah.
Right? That's the reason why they've made the conduit, the path between, well, I want to switch from one to the other. That's why they've made it more difficult. It's because everyone would do that.
Right.
I'll
Absolutely.
take the cheaper option until I need coverage.
Yep.
Okay. So going from traditional Medicare to Medicare Advantage, that gate's pretty much wide open.
Yeah. During any open enrollment window during the fall, you can choose to switch to a Medicare Advantage plan for the following calendar year.
And if that's you, you're going to want to be very aware of the coverages within that plan because you're used to Medicare, a supplement policy. So make sure you're working with an agent team like Ben. If you are on Medicare Advantage and want to and say, oh gosh, I either didn't realize I was going to have all these out of pockets.
Yeah.
I don't like the administrative hassle of these bills. I had a health change, something like that, and you want to go over to traditional Medicare. What is that process?
So the big thing with that is wanting to make sure that you are in a period of time where you can also sign up for a standalone prescription drug plan, a PDP. And that's going to be Part D during the open enrollment window in the fall or right now between January 1st and March 31st. Because most Medicare Advantage plans do have drug coverage built into them, not all of them. And if you do not have that prescription drug coverage for more than 63 days, then they start assessing penalties there too. So
are those permanent penalties as well? Like it's not just at the time you buy; it's for every year into the future.
And it's weird because Part B is 10% per year, and this is 1% per month.
Oh,
yeah, weird calculations. So as long as you're within one of those periods, the process from switching to a Medicare Advantage plan to original Medicare, potentially with a Medicare supplement, that's what we would recommend. If you don't have a Medicare Advantage, go with a original Medicare with a supplement. Then if you've had the Medicare Advantage plan for a year, no problem. You can switch to that Medicare supplement with guarantee issue. So they're going to say, yeah, you tried out that Medicare Advantage. It was a trial right. Come on back to the plan. If you had a plan and you were trying out a Medicare Advantage plan, then you can switch back to the exact same Medicare supplement plan that you had. Or if you turn 65 and you tried Medicare Advantage plan, you get guaranteed issue for any Medicare
So
supplement.
there is a mulligan, but it's like first whole only.
Yep. For 1 year, once in your lifetime.
Got it.
Interesting.
Outside of that,
then you're subject to medical underwriting. So they're going to ask, you got to prove that you're healthy enough for that insurance company to cover.
And a lot of times people are thinking about making a change. It's because something has changed in their health,
Absolutely.
right?
Yep.
So the very reason this is even on your radar potentially is the reason why you can't do it.
Right. Yep. And they're going to either say, yes, no, sorry, we're not going to cover you. You get to keep your Medicare Advantage plan, so you still have coverage. The other option is, yeah, here's this rate, but then after you go through underwriting, it's double what it would have been if you had been healthy and gotten those preferred rates.
That's right. They're going to price it based on the risk that you represent to that insurance company.
Right.
So there again, I'm just going to go back to it. I'm not going to say that I was right, but I'm like, this is the biggest health insurance decision you're going to make, right? And so you're going to want wise counsel. You're going to want sage advice. You're going to want planning, because this deals with IRMA and other things. We're not going to be able to get into that today, but your income influences what you pay for either of them. Obviously, because there's a cost difference between the two. This is present financial position, but it's also your retirement plan. It's your investment withdrawal strategy. It's your safety net. Like, you've got to look at all 6 areas of your financial life to make this decision.
That's right, because the potential risk here is that maybe that Medicare Advantage option, the one that we say is often the cheaper option as far as a monthly payment to you.
Right.
You have to pay attention to the fact that, yes, you're spending less money in your monthly budget on premiums, but you need to be setting aside some very intentional amounts to be spending on those out-of-pocket costs, because eventually you're going to have some costs, right? Unless you're blessed with great health, you never have a health decline, you pass away suddenly someday, and you really never had much interaction with doctors in retirement. That would be wonderful. Dream scenario for everybody. Right. But if you're choosing a Medicare Advantage because it's the only thing that really feels like it fits in your budget on a monthly basis, you may be marching towards some sort of a medical out-of-pocket cost, and you don't have a game plan for it, potentially. Or worse, you have to resort to pulling some money out of some long-term investment accounts at the wrong time, or it creates a tax hit to you that you didn't see coming either. I agree with what you said. This is why this is such a comprehensive financial planning issue. Yep. And it's the reason why, even when you get into retirement, having a certified financial planner in your life who has a team of insurance professionals and CPAs and attorneys and can help you with your investment decisions, all of that, it's important. You know, you don't just hire a certified financial planner to get you to the finish line, because the finish line of your working career is really the start of a whole new race, right? And it's one where you have big decisions that you're making right there at the start of the next race, your retirement decision, your healthcare decision, all of that. But you're going to have a whole series of life decisions, because retirement is going to last a lot longer than what you realize it is. And it's going to change throughout phases of your life. You know, it has its own life cycle, if you will. And you need to make sure that you stay in the habit of making your financial decisions in retirement within the context of an overall financial plan.
Well said, Josh. Completely agree. Ben, we're running out of time, but I think we got time for this. There's one of the questions that we got, special needs plans for Medicare Advantage. So there's some updates there, or what can you share about that?
There are a handful of Medicare Advantage plans that are specifically designed for individuals with that meet qualifying criteria. 3 of them: a dual eligible special needs plan. That'd be somebody that has both Medicare and Medicaid. There's a chronic condition special needs plan. That's somebody that has a list of qualifying chronic condition, typically diabetes, heart failure, something along those lines. And then there's an institutional special needs plan for individuals that are in a skilled nursing facility. Those are often abbreviated to DSNP, CSNP, or iSNP, which those aren't helpful, but the other names are pretty good. I feel like they got their act together from, I have Part A. What does that mean?
Right.
But I've got a chronic condition special needs plan. I feel like it makes a little bit of sense.
Got it.
Sure.
So
are they less expensive, or what makes them different?
Generally, they're designed with the person with that condition or that criteria in mind. So, for instance, somebody with a dual eligible plan, both Medicare and Medicaid, they may receive an additional benefit on their plan to help cover the cost of groceries, or a larger over-the-counter benefit that they get on a monthly or quarterly basis that they can use to buy vitamins, supplements, Band-Aids, something like that. And then for the chronic conditions, lower costs for medication.
Gotcha. Okay.
And then just real quick, I mean, one of the other topics we'll hit in another show is if you're on disability, Social Security disability, it's 24 months before you're eligible for Medicare. Then you could be eligible for Medicare, but maybe not for supplements.
Potentially not.
So again, like I guess the announcement here is when you've got a unique health situation or big health decision to make, you need a guide. So you need a team. So reach out to Ben, reach out to our team, or reach out to whomever in your area as well, and get some good advice so you can navigate these big health decisions and get the right coverage in place. So Ben, thanks for being back on the show. Won't be the last time. Always look forward to having you. So on behalf of Ben, Josh Gregory, all of us at Korhorn Financial Group, have a great weekend. We'll see you next Saturday for the Wise Money Show with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.